Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. We are going to take a look at one I'm sure everyone is well aware of, Johnson & Johnson out of the healthcare sector. It is April 15th, Monday. Hopefully you have started off to a great week. Let's jump right in the video. And before we jump in, if you could do me a favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Make sure you hit that notification bell so you're notified whenever we put out any new content. And drop a comment down below. Are you investing in J&J? Big pullback over the last couple weeks. Not much of a pullback today, if at all. But I wanted to cover this because it really has dropped down real close to its 52-week low again. So again, hit that thumbs up, hit the subscribe button, hit the notification bell, drop a comment down below. Doing that really does help out a small YouTube channel like mine. And let's jump back into J&J. First, we'll take a look at the stock screener. This is how I look at a company like Johnson & Johnson on a high level to see if I'm interested in investing. It's also how I look at companies that are already in my portfolio to make sure they still meet the criteria, the screener that I've set up. Must meet 5 of 8 or 6 of 9 if it's a financial company. I throw in price to book for banks. Companies like banks. And just because it meets 5 of 8 or 6 of 9 doesn't necessarily mean that I am investing. It just means it passes the initial screener. Then I do more of a deep dive into the financials, try to do a discounted cash flow analysis on the company to see what I'm willing to pay, and then wait for the stock price to come in line with that price I'm willing to pay. Now back to Johnson & Johnson. If you want to know more about this company, check them out at www.jnj.com. That's www.jnj.com. That is their homepage where I pull this information from. They recently did do a spin-off, Johnson & Johnson. Kenvue is the name of the company that they spun off. So a lot of the brands that are under Johnson & Johnson in your consumer staple sector, like your Johnson & Johnson painkillers, your excuse me, talc powder, those type of items are no longer under the J&J brand. They are under the Kenvue brand, again, the consumer staple brand. Now J&J is a healthcare stock, and it's broken into two sectors, the J&J medicine side and the J&J medtech side. And here, our diverse portfolio spans multiple therapeutic areas: oncology, immunology, neuroscience, cardiovascular, pulmonary hypertension, and retina. We are continuously working to develop treatments, aspiring to find cures, pioneering the path from lab to life, and championing patients every step of the way. So that is their drug manufacturing arm, right? So if you have prescription drugs, they might come from Johnson & Johnson. That is under the innovative medicine side. And then you have the med tech side. Excuse me. From advanced mapping and navigation to robotic assisted solutions, we are delivering care in the hardest to reach parts within the human body, and by focusing highly engineered and intelligent treatments exactly where they're needed, we're protecting what's healthy and delivering care to what's not. We're helping to restore sight in ways that feel more natural and impeccable, so people feel more like themselves again. So this is more like similar to like a med tech. This is their robotic arms or human body treatments, so helping doctors do surgeries, with robots, with equipment that they use for that. So that's the med tech side, and then you've got obviously the drug side, right? Prescription drug side. Again, www.jnj.com is their homepage if you want to know more about this company. You can click on these where it says learn more and basically read through the rest of it yourself. Now, the reason we're taking a look at them, down slightly on the day, but that's really not it. They, have really come down not only over the day, but over the last couple of weeks. So I wanted to take a look at this. We are talking about Johnson & Johnson, ticker J&J, out of the healthcare sector. Close out the day at $147.49. Looks like they're up a little bit in the after hours, at least whenever I pulled this information. 52-week range as low as $144.95, as high as $175.97. So they are closer to their 52-week low than their 52-week high. Market cap of $355.418 billion. They are a large cap company. A beta of 0.53, so less volatile than the overall market, even though they have seen a lot of volatility over the last couple of weeks. PE ratio, this does seem a little high to me at 28.42, but I feel like Johnson & Johnson is one of those companies that always has a high PE. You feel like you have to pay a little more than what you'd like to for a company like this. So again, while it's down here close to a 52-week low, it's definitely one that I've got on my radar. I've been adding to it at much higher prices than this, in the 150s. I think my cost basis is in the 160s. We'll see that here in a little bit. EPS sitting at $5.19 per share. Earnings date, April 16th, so that is tomorrow. So that may be part of it. Maybe they're seeing a bad earnings. We'll see what happens. It could continue to drop. It could pop. I think this is one of the first earnings since that spinoff, so really interested to see what the earnings looks like. Core dividend is $4.76 on the year. They are a quarterly payer, so divide by 4, or we'll see that here in a little bit. Dividend yield, nice starting dividend yield, 3.23%, especially with this recent pullback above 3% is very good for Johnson & Johnson. Ex-dividend date, February 16th. They paid out March 5th. Now we're going to jump over and take a look at dividend yield theory. If you were to go over here to the left on Yahoo Finance, where I pull this information from, you'd see a lot of tabs you could look at. One of them is statistics. You go to statistics, you go down to dividends and splits. To check out dividend yield theory, you look at their 5-year dividend yield average of 2.67%. You compare it to its current 3.23%, or over here where it says forward dividend 3.23%, same number. And since it is higher, that speaks to some undervaluation on this one, at least according to dividend yield theory. Now, they do have an elevated payout ratio, though I don't know if this has been updated since they did the spinoff, but it is high, 90.38%. I like 75% or less, so I hope they get this squared away. Again, I'd like to wait and see what this earnings report does and see how the free cash flow shakes out over the next couple quarters, because this may still be with the Cavenue. I don't know that this has been updated, though the dividend yield has been, so maybe it has. But that is elevated. I like 75% or less, so that's a little higher than I'd like it. Now we're going to jump over here to the financials. We're going to look at free cash flow. A lot of good information under financials tab. Again, if you were to go over here to the left on the Yahoo Finance page, you see a lot of different tabs. Analysis page, a statistics page, financial page. If you go down to financials, you're going to find a lot of good information. Balance sheet, income statement, debt to equity ratios. You can look at their assets, compare that to their liabilities, make sure they have more assets than liabilities. Is their revenue growing over time? Is their income growing over time? Are their margins expanding or contracting? All good information that you should be looking at if you're investing in individual stocks. For our purposes, we're going to look at free cash flow. Typically, if a company has growing free cash flow, they have growing dividends, and we want growing dividends as dividend growth investors, or at least I do. Going back to 2020, you can see here $20.1 billion in free cash flow. 2021 down to 19.7. Though we're going to see something here about the repurchase of shares. So 2022, it looks like it dropped down even more to 17.1. 2023 back up to 17.7. But if you look here, repurchase of capital stock, where it looks like their numbers went down, they actually started increasing their share buybacks. 2021 a little bit more than 2020. 2022 almost double what they were doing in 2021. 2023 not quite as much at 2022, but definitely more than 2020 and 2021. So some of this decrease from free cash flow, specifically from 2021 to 2022, can be accounted for in this huge jump up in share buybacks. They're repurchasing their own shares. Same thing here in 2023. Free cash flow was up. Repurchase of shares was down a little bit. But overall, I'm seeing growing free cash flow along with repurchasing capital stock, which I really like when a company has both. That's a good thing. They're buying back some of their shares. That means you are more of a shareholder or own more of the company, even if you don't add any more capital. Now, another site that I like is stockanalysis.com. You pick any sites that you want. Just make sure you're picking more than one so you can make sure the information you're getting is accurate and up to date. And they have 13 stock analysts that have taken a look at this. They call it a consensus buy, though it is right on the edge of a hold and a buy. So if you were to go to stockanalysis.com, you could click on each one of these. This would be a strong sell, a hold, a buy, and a strong buy. And you could see how many of these 13 analysts are calling for each. There may be a lot calling for a hold, maybe even some calling for a sale of the stock, as well as a buy and maybe even a strong buy. You'd have to go to that site and see how this breakdown looks. Now, they have a low estimate of $40, which would be a huge drop. And boy, if they did that, I would really probably back up the truck on this one. I don't see that. I think that's really unrealistic. But hey, you never know. The market does crazy things sometimes. Average estimate of $166.92. This seems more in line with what I'm thinking. A high estimate of $215, which would be a 45.72% increase from where it currently sits. And you could collect that, 3+% dividend yield, at least if you were to buy them now along the way. Now, I'm going to go into statistics here. I like to look at return on equity and return on invested capital. I like 10% or better for these. Return on equity sitting at 49.2%. That is smoking high. Return on invested capital, 20.6. Again, both well above the 10% that I'm looking for. EPS growth. Now, I am a little disappointed with this. I like 5% forecasted growth over the next 5 years or better. It's actually forecasted to be negative 1.57%. But again, I don't know how much of this is because of the Kenvue spinoff here, right? I'm assuming some of it is. Obviously, whenever you spin off a big portion of your business, you are probably going to lose some EPS. So I'm assuming that is part of this decrease in EPS forecasted right here. Revenue growth is expected at 3.44%. We're going to take a look at the dividends. I do have a position in J&J, right? I actually own 112 shares. I know it doesn't show that, but I should have clicked on this. I've got a covered call set on this one as well. My cost basis is, a little higher than what it is right here. I am down. I think my cost basis is 161. I should have clicked on this so you could expand it, but my cost basis is in the 160s. I am down 8.35%. That's how I know, I'm about down in the 160s or down $1,500. So right now I added a couple shares last week. I don't know that I'm going to add any this week. But if it stays down in the 150s, I'll probably add at least a couple shares next week. Even if it's in the 150s, I'm going to add to this one over the next month as long as it stays down under my cost basis. And I'm not talking about a lot, one share every other week or a couple shares. I think I added 2 shares last week. I'm not going to add this week. Maybe add a couple more shares next week. I hope it stays down in the 140s. We'll see. But as long as it's under my cost basis in 160s, I'm going to nibble on this one here. Now we can see it as a quarterly payer. Now, they say their payout ratio is 34.69%. Again, this may be updated after the Kenvue spinoff. I tend to lean towards the 90% right now just to be on the safe side. And over the next couple quarters, I'm going to be watching this to see where it shakes out. Dividend growth is decent for a company that's been paying a dividend as long as they have. 62 years of dividend growth at 5.31%. That's really good dividend growth for a company that's been paying 62 years. Buyback yield of 3.89%. Shareholder yield of 7.11%. They are returning a lot of capital to you, and you are doing well as a shareholder holding this one, even though right now they are down. August 2021, going back to $1.06 they were paying per share. May 2022 they jumped it up to $1.13. May 2023 up to $1.19, and that's where they have it now. I would assume that in May of 2024 they're going to jump it up again. So look out for that next dividend raise that should be coming up in the May payout. Well, that is it for this one. Let me know what you think of J&J in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And let me know what you think of Johnson & Johnson. Again, I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like J&J you'd like me to do a stock pick of the day video on, go ahead and drop it down below, and I'll work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investor journey for educational and entertainment purposes. Investing involves risk and money to never invest in any amount. No comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel certified financial advisor.